What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for March 28th, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, before we get started, go ahead and drop a like, because you enjoy these videos, to show your support and to get the word out about what is really going on in the world today. But nonetheless, that is why I created this channel, to paint the reality of the situation and not sugarcoat everything that comes out into society. So, with that being said, what exactly is going on? Now, it was very eerily weird about how all weekend we didn't really get a lot of information. Now, we had Deutsche Bank have a lot of problems last week, or we're hearing a lot of stuff about essentially the credit lines. Capital One, with the same credit swaps, were extremely high going on there. But the biggest thing to understand there is that they cannot let Deutsche Bank go under. If Deutsche Bank goes under, that's the complete system going under. So be very mindful of that. But today, something I was unaware of, but tomorrow, but as of tomorrow, we do have the SDIC chairman testifying tomorrow in front of the Senate, and he has come up with some notes before he goes into tomorrow that was released today. Very, very interesting what's going on here. The FDIC said their cost of Silicon Valley Bank failure is $20 billion. Not only that, funds are coming from the deposit insurance fund. And then also 15% of the entire fund is already being used. And we are just over 2 weeks into this bank crisis currently going on. SVB is the most expensive bank failure in U.S. history. Just to put things into context about what's currently going on. So tomorrow that will kick off. Again, it's not highlighted on any kind of economic calendar, but it is very important because of those notes. There's going to be a lot coming from essentially that meeting, that testimony. We're going to see the weakness. Again, we've heard multiple times, Yellen administration, Powell, all last week, essentially saying that the banks are sound and resilient. That's all you hear: sound and resilient, sound and resilient. Every hour on the hour, sound and resilient, sound and resilient. So, the truth of the being is that if things cave even more than what they already are, and what I'm expecting, it is going to get a lot nastier. And you have to understand the side effects and what happens. So not only do you get the failures, you get a lot of people laying off, people losing billions of dollars. This is the biggest thing you have to understand. If these big corporations start losing huge millions and billions of dollars and can't make payroll, that money is lost, right? If they are not insured, just like we saw with SVB, a lot of these huge corporations had millions and billions of dollars inside these banks, and they are not covered by FDIC. FDIC only goes up to 250,000, and they're trying to change policy. It's funny how when stuff starts to break, that they're trying to change policy as opposed to sticking to the rules that they implied. So these things happen, and then they get blown out of proportion, and you're chasing everything down, trying to patch everything when the wheels are falling off about 10 miles back. So with that being said, it is getting really nasty, and I don't like the fact that it's getting very quiet on what's going on going into the testimony tomorrow with the FDIC chair. And so we will get a lot of information when that comes out. And then that will be out in the morning. He'll start testifying. That will be, again, very critical as to what is going on with the current structure in the market. And a lot of this, again, the sound and reiteration of the banks being sound and resilient, reassurance every hour on the hour, like I said, is absolutely absurd when that is not at all the case. Right, things are in a bad state. It doesn't matter how much. And this is what's showing, and this is what something I wanted to highlight when I started out with this video, was the fact that we've already seen 15% just on SVB alone. right? And it's not including any other banks, right? You put 50 more banks on that, essentially flopping, that is going to put a huge dent in this so quote unquote fund that they have. Now, the top five banks, right? They're really just in a league of their own. This isn't really aiming at them. I'm not saying that they're not going to get hit by this. They can very well be exposed, right? We don't know 100%, right? We don't get full exposure, right? It just depends on their books and how their books are essentially done to really determine what the public actually sees, right? So if certain things aren't on the market, then the public won't actually see that they are underwater by billions of dollars. You won't see that. So that being said, when you take it to market, right, that's why SVB got exposed, because they took it to market, and then people realized how much money they were underwater. The problem is there's a lot of banks, and to include the top five banks. But the problem is you're not seeing as much liquidity from these lower banks because everybody's already moved their trillions of dollars over to the big five. So with that being said, this leaves a lot of exposure for all these other corporations. Now you have to also understand that a lot of these institutions also have real estate, right, and industrial real estate as well that is folding, right, because everybody's working remotely. And understand that a lot of these other loans that they have are defaulting because they can't pay. Nobody can pay rent, right? The average American can't pay. Plus, again, uh, all the other delinquencies on credit and everything else that are currently going on are causing a big problem. And then also understand there's going to be a credit crunch, if you haven't heard about this already, that essentially credit cards are going to be starting to get cut down, right? Your credit limit is going to be tightened. That is the next thing to drop. Understand that something else that I didn't mention over the weekend that I had read over the weekend was this buy now, pay later, right? Was real huge over the past probably about 2 years, and Upstart was a huge part of that. I liked Upstart when it first came out. It skyrocketed like 10x uh, when it first originally came out, and then not long after last year, it just absolutely got wrecked because of the fact that people just weren't paying it back in defaults, right? And that was essentially what originally was could have been a great investment, but when you realize that nobody can actually pay because they're getting laid off, this buy now pay later is a horrible strategy because the company will never get paid because people just aren't getting the money. And so what we found out is that people are buying a lot of home furnishings and just food in general on buy now pay later. That tells you a lot that people are trying to cut expenses, so they try to make their home much nicer, and then make sure they have food, right? You have to understand that food is the cheapest entertainment possible. And so people are heavily leaning towards this, right? So not only on the credit card, but buy now, pay later. And then credit crunch would be the next thing. So again, we saw high rates of credit cards. We know that they're not on a fixed rate. So a lot of them, are sitting at like 19% of whatever debt you're carrying over month to month. So people are getting actually squeezed hard from both sides. Now, it's something to keep in mind here too, is that with that being said, not only the credit crunch, we have earnings coming up. So we do have, we'll get a lot of exposure to what's going on with the banks. And you're already starting to see a lot come out now, and you'll see a lot between now and then because we've got 2 more weeks before those earnings start coming out. I'm sure we'll see more bank failures before then. A lot of these, even First Republic, is something that has been kind of holding up as of right now, just trying to buy time so they can fix their books, which is concerning. Or if you need more time to fix your books, that means things were just in really, really bad shape. Even with that being said, right, even going back to Deutsche Bank, people are saying that, yeah, they were still had I don't know if I think it was billions in profit or something like that. But nonetheless, people can't let Deutsche Bank go under, right? There are certain banks that are deemed critical in SVB and and Credit Suisse weren't deemed as being critical banks from what they were saying, or Signature Bank, excuse me, not Credit Suisse. Credit Suisse is a critical bank to the European infrastructure, the global infrastructure, if you will. So, with that being said, again, a very tough position we're in. This is, again, not a quick thing, but when it happens, it will be quick, right? At this point, you're just waiting for that one piece of information to drop, and then that just draws huge panic right now. And the fact that, again, everybody's reiterating that things are sound and resilient should be concerning, if not already. So, nonetheless, we are going into a huge crash, in my opinion. How big that's going to be really depends, but we're just waiting for that one piece of news. And this is why it seems like everything is just very quiet and eerie right now, because of that fact. Or you can almost hear pins. If you're listening to the media, it's like you can almost hear pins drop at this point, because they're being very selective and very careful what information comes out, especially if it's about banks, because of what's currently been going on. So, now is the time for these banks to start folding, right? If all this money has essentially been liquidated over the past weeks, now we just wait for them to start buckling, because we had another 25-point basis move. We had another 50-point basis move from the ECB. So it's just a matter of patience in watching these things start to break and fold and be done with it, right? So with that being said, now we wait and we be patient. We see it tomorrow. FDIC chairman. Be interesting to watch what comes of that tomorrow. But aside from that, technical wise, again, the market really isn't doing much. Tomorrow will be a big move. I wasn't expecting a big event until I saw the FDIC and the statement that he was saying and the concerns he was having about a lot of different banks, about changing a lot of regulations because of what's going on. And again, the problem being is there's a reason the regulations were put in there. They're rules, but let's just break the rules because stuff is falling out of line. It's not ideal. So nonetheless, tomorrow is going to be big, right? We can get the market to start moving again tomorrow. With whatever he says. Now, again, he's going to come out and say everything is sound and resilient. Of course, every person in under the highlight right now is something they have to say, right? And so to not draw panic. So nonetheless, he'll be in the spotlight tomorrow. Again, tomorrow, I think if we do start selling off, break, retest, higher low, right? If you look at the daily, could be another higher low here, could drop back down into this range, the 3,800 mark again tomorrow. I think could draw enough. Really depends on what he says, but there's a lot of concern about weakness in the bank, which he's going to get some hard questions, and we saw that from Powell, right? This is how this whole downfall started, was because of Powell, and Powell saying that things were a lot more worse than he thought they would be. And then that started the downfall, and then we started to get more and more, especially with the projections and the bonds. And so, again, one thing you need to keep in mind is the bonds are pricing in 4 rate cuts, as opposed to the baseline that Powell is saying it's not going to happen this year, that we're going to pause. But the bonds are saying otherwise, that there's going to be something bigger. And I believe the bonds are correct in saying that we will have 4 rate cuts, because it's going to get that bad here in the next couple months. Again, banks start folding, payrolls aren't going to be made, money is just going to be lost, right? And so understand that all this money that's been invested isn't insured. So this is that whole deflation I've been talking about, right? And all this money is isn't insured or is way underwater. You just lose that money. You're going to lose millions and billions of dollars because of that. So that is the concern, and understand that we're this tool that we essentially created is already at 15%, which is not good, considering that there's much more out there still to be offloaded. So again, if we do start selling and look at 3,800, again, we're playing in that between that 440 mark. So looking to see what happens there. The dollar at this point, again, I'm not really going to start going over the dollar anymore, because the dollar at this point is going to be all out of whack, right? Considering what's going on, we are getting some deflationary aspects when these banks start folding again, because if there is no insurance to cover them, that money's just gone, right? So the 150 billion that you have in there, 150 million that you have in there, FDIC is only going to cover 250, so you're going to lose the rest of that money. And so this is how we get deflation. So with that being said, we'll see what happens here. We'll see if this starts to sell and going into the bottom into the 3,800. If not, I really don't see anything. You can reassure the bank, but I don't see the bank breaking out of 40.50 unless something dramatic happens. And it would have to be something I couldn't even possibly think of right now. There's just way too much bad information out there for me to believe that this thing's going to start pushing back up. Unless all of a sudden Powell wakes up and just starts randomly cutting rates. That's just not going to happen. We need a bigger event before him to start cutting rates. Crypto got some bad news today as well. I got some more lawsuits on Binance as well, so that scared the market. The market started selling again. There's been a lot more news just around the crypto space and try to cause fear in the crypto space. I felt like it was going to happen, especially with what was going on with the banking system in general. The Fed isn't going to let the banking system just run away with or crypto run away when they're downfalling, right? They'll start throwing out stuff. If they need to, they'll delay it. They'll strike fear. They have ammunition to strike enough fear in crypto to drop it along with everything else. And so right now, it's just not going to decouple like I think a lot of people think it's going to. I think just now isn't the time. I think if there's going to be a decoupling of everything, it's going to happen when everything crashes. Then at that point, you could actually see a decoupling of crypto. And so with that being said, we will see in the next coming days. This week, I think it's going to be really important. It's going to be kicked off tomorrow. We'll see what happens there. Tech looking a little weaker today, but still kind of just hovering. Again, everything is starting to look the same. When stuff starts to look the same, that means you're going to get a big move to the downside typically. So again, there's a lot of fear starting to boil again up. And so we'll wait and see. Tesla needs to either one break out of the 200 or it needs to essentially hold the 185. If it breaks the 185, you get some support here at the 177, 160, 170. Then down to the 140, you got a pretty big gap if it breaks that 170. So that's what I'm kind of looking for there. I'm expected to roughly be around 140. Really depends on how bad the market gets hit. Again, we start getting panicked. You don't know what's going to happen at that point because depending on how much fear that drives, it could get really bad, really fast. BA, again, you have a new catalyst too, so keep that in mind. New catalyst can drive fear and drive us down. So you do have to be mindful of that. BA right now, again, just kind of sideways, just waiting for the next piece of news to drop. It's been holding for a long time, something I've been talking about. It needs to roughly hold at 188 mark, or if it's going to break out, it needs to roughly break out over the 208 mark for them. Banks in general today just kind of had a little bit of had the gap down and the push up. So just kind of like a retest. Could still see this dropping down to the 116 mark. If you want this to go up, it needs to break the 132. Again, I really don't see any upside in with the current environment where we're in. This thing continue to sell to 281. Bulls, you need this to break back over the 325. Again, not financial advice. I really don't know why people are buying banks, especially because it's critical right now. You don't know what banks are actually going to go under. You are playing with fire and trying to take advantage of that. That's great. Buy into fear, but you really don't know what's going to happen. These things can go under, go to zero if they fail. And so that's something you really have to consider when buying investments like that. I'm not saying all banks will. A lot of these bigger banks should be okay. But aside from that, you're buying these little mom and pop banks. I think you're really playing with fire, but again, not financial advice. Bank of America sold off really heavy, did have a bounce. We'll see what happens here if this is just a retest and a drop. But as of right now, again, things aren't looking the greatest, but we'll see what happens. But yeah, so that's pretty much it. Again, I don't want to make these videos too long. This week shouldn't be a lot of information. It really just depends what happens overnight session. Everything overnight is going to be really important. Again, they're trying to control the news. Any big events, they're trying to push as close to the weekend as possible. Hopefully drop it on like a Thursday, Friday. Just be mindful that's what they're trying to do. It's not saying that a news event can't drop in the middle of the day or the week or the night and just completely flush the market. We are in a critical we are on the final stages of, as I've talked about, and it is very critical what drops. There will be a piece of information that drops that will drop the market. We just don't know what that is. It's going to be something with the banks, to be exposure. Somebody got exposed way overboard on one of these banks that fails, and they can't make payroll. And then that's going to be a problem, right? That just means a lot of people are going to get laid off and just get nothing, right? And so that's something you really have to be mindful of and be careful for. And this is why these companies, a lot of these really great companies, have big reserves because of times like this. This is why these things are implemented. They just don't randomly get bailed out, and that's why Yellen keeps saying it's selective, because they won't be able to save everybody, but they need to make sure the system is still intact. So they need to make sure identified banks are secured. SVB wasn't one of them, but they had some really big investors in that bank that they couldn't just let it fold. That should scare you. And so, being said, we wait and we see what happens going forward. But again, very interesting, in a very historical time you're living through right now. Again, no time is going to be the same. Nothing can happen, or the worst can happen. It's always better to aim for worst case scenario and manage risk and then go from there. And so we see what happens. But if you made this far, I do appreciate you. Go ahead and drop a like button. Till next time, I'll see you guys later.